All right, this is an important video on how to trade volatility moving into CPI. So UNG, this is the thing I'll be working with through the winter, and it's the natural gas fund, and I'm pretty much just going to hit these energy plays and then my shorts on Bitcoin. And so I already have my entry here. I got my first entry at 21.82. I was up. SPY took some downside this week, and so now I'm still up, but only by probably about 2% from my entry point. Okay, so with the volatility, pay attention to this part. Okay, so moving into CPI, the option market prices in a range, right? They price in a potential move for the market. So that's a little bit too deep to describe how to figure that out, but just accept what I'm saying because it's information you can find, right? So pay attention to this, knowing that the market volatility, the market has priced in a 5% move to the upside and or to the downside, what I want to do is I hold my play, right? A lot of people start to panic and they want to sell out, right? But they're coming into the bottom of a range. So I hold my play through the CPI data. When the CPI data comes out and we start to get some movement out of the market, knowing that there could be a 5% move to the upside for the market, which would probably, this thing might bust up to a 10% move. It's going to outperform the market. So if the market were to move 5% off of the data, which is what the market is pricing in, is a 5% move in either direction, they don't know, right? So I hold my play. Now, if it goes to the upside, I'm already in it. That's why that's why I follow along with what I'm saying. That entry here is a good entry, right? So I got myself that cushion like I was talking about. And so I'm still up even though the market's down. I got this savage entry. So that allows me to play it both ways, right? So what I mean by that is if the market moves up, I'm already in the play. If I start to see the market sell off with volume, meaning there's going to be a lot of volatility tomorrow, so it's not like you kind of got to wait for the continuation, right? So it's not on the initial move. I don't just go, oh, I'm out. I got to see it with volume. And if I start to see the market dump and certain indicators dump, or like a big macro indicator move, like the bonds or the British pound, if I see one of those macros causing this sell-off, or if CPI is just horrible, then what I will do is reposition myself. Now, you don't have to do this. A lot of people would just average down, okay? But what I would do, because I'm me, is I want to sell out here. I'll just close the position, accepting the fact that this is going to probably take a 6% move to the downside. It's a volatile thing we're dealing with here, right? And it will probably come into this range. More about that later, but this is the range it will probably dip down into, okay? So then I will just set a buy order right here at 2078, so I don't miss the 4%, right? Because I want to get the best deal. So if I see it with volume, and I think this is going to break lower, which it may or may not, but if it does, I'll just sell out, put another buy order in right here. I'll probably double my order because this position was operating very well and I was going to add to it. So I'll just add probably 100 shares here, okay? And then that is where I'll roll with this at this around that 2076. If it moves to the upside, I'm already in the play. So that's how I'm looking at it for tomorrow. And just to give you the zoomed out view, I'm going to remove this. And my logic on it is basically what you can see is this support range, right? So if we get a dump on the SPY, you see this support, you see this support. Basically, even if the SPY dumps tomorrow, we might hit this range, right? And then just another thing. Why I would immediately set the order there is because what it could end up being is what you're going to get on this kind of a move, and it's always with risk, but what you're going to see is this dump. It might come just below that range to like those wicks right there, and then it's just going to be a wick, right? So I want to try to catch that wick. That's what I'm trying to do. Only trading wicks, dude. You know what I'm saying? At the end of the day, just trading the wicks, so that I, minimize my exposure with all this volatility. So I'd rather miss the play and have to re-enter up here than to try to get in too soon. I'm going to try to catch the wick, which would be probably 2076. So the idea, big dump on the SPY with volume, macro indicators moving, sell out real quickly, and within the next 20 minutes, depending on what I'm doing, next hour, I'll re-enter the play. And then what this would look like basically is just a break of that trend line. What the daily would look like on that, the candle would just kind of look like one of these. You'll get this wick here, and so I'm going to try to catch that wick, and then the candle body would actually close, right? Oh, probably won't be that fat of a move, but probably close closer to here. So that's the idea, is to try to catch that wick on this, and then that candle body will settle down on this ascending trend line. So that's my UNG play.